Let's take a look at the latest numbers from the Belgian capital markets. Over the course of the year, the total investment volume for 2018 came in at 4.8 billion euros and is the best year ever. The total volume invested by investors during 2018 increased by 37% year on year. This figure excludes residential, corporate acquisitions and land sales. With 45% of the total volume, offices dominate the market. But compared to last year, retail increased the most in volume thanks to the sales of 3 shopping centres during the year. Retail doubled its share to 39% of the volume in 2018. On the contrary, industrial is less active than last year at 9%. Here are the many volumes by asset classes. Looking at the 2018 investors profile, they become more international every year. We discover firstly that the Belgian investors accounted for 39.8% of the transaction volume. Secondly, the Korean investors who are active in Belgium accounted for 13.7%, followed by the Netherlands, which account for 12.3%. Furthermore, the USA accounted for 8.3%, while Canada accounted for 6.3%. Interestingly, as in 2017, the number of value-added transactions is very high. Core transactions, however, continue to dominate with 65%, among others, thanks to large shopping centre sales. The office occupier market has evolved as follows. Firstly, the take-up in Brussels declined by 14% to 361,000 metres squared. In 2018, co-working operators signed for 70,000 square metres of transactions. This is twice as much as 2017. Secondly, in Brussels, the global vacancy rate is at an 18-year low of 7.8% compared to 8.2% in 2017. In addition, the CBD declined to 3.6% compared to 4.4% last year. Thirdly, prime rents in Brussels increased further to 315 euros per square metre, which is an all-time high. Average rents have also reached unprecedented highs. Furthermore, prime office yields are at a record low of 4.25%, which is 25 basis points lower than 2017. Finally, the long-term yield remains stable at 3.75%, which is unprecedentedly low. So, let's guide you through the largest office transactions of the year. In the retail market, prime high street rents in both Brussels and Antwerp decreased. In addition, prime retail yields are fluctuating. Where shopping centre yield declined to an all-time low of 4%, unit shop and retail warehousing yields stabilised at 3.25% and 5.25% respectively. In the last 12 months, 3 shopping centres were sold. As a result, 2018 is the second best year ever for retail investment. Conclusively, for the logistic market, prime logistic rents remain stable at €55, whereas yields compress significantly to 5.25%. That is an all-time low.